Welcome back to another episode of Built to Grow. And I have a longtime friend on the show today. His name is Matt Lewis. And what I love about Matt is he's not, but there's a lot of insurance brokers out there, y'all, that, the reality is I make jokes that so in some towns, you can't throw a rock without skipping on the head of at least 10 insurance brokers in that town. What I love about Matt is not just that he's a good friend and a good person, but Matt is a real person of his craft that, especially in agribusiness enterprises, that Matt really seeks to understand the risks that they face and understand across the nation, what are instances of, risks of new risks that could be, that weren't previously understood or that, what the impact of these things were and making sure that he's helping his clients ensure that they're protected against the risks and that they have business continuity. And this is a really big issue, right? I mean, agribusinesses don't have a ton of margin, that sometimes there's good years and sometimes bad years. And there's just not a lot of room for error here. We can't have, major claims that can, potentially disrupt things. And they happen. We're dealing with people. We're dealing with hauling things. People can get injured. Farming isn't easy. Agribusiness operations aren't easy. And so I just really so appreciate Matt's viewpoint. And so I'm super stoked to have you on the show today, Matt.
Yeah, looking forward to it, Mason. Happy to have the conversation and dig in here.
We always highlight this at the end of the show too, but for our audience to know, Matt Lewis is with JG Parker and Associates out of Fresno, California. He is their agribusiness, leader, practice leader, just very agribusiness focused. And so that's why I wanted to have him on the show that, in regards to looking at various different types of operations, that Matt has just been a wonderful resource of really trying to understand, how do we properly make sure that risk is covered here. But the intention of this for our audience too, and we're not going to just be talking about insurance policies here. If we want to put people to sleep, there's other ways to do it. Right? So, it's more so. I think a lot of businesses need to look at risk comprehensively, right? That it's not just about insurance coverage. There's other ways to mitigate risk too, but it's having this lens on understanding what are the risks to your business. And it's not always just because your neighbor gets a particular policy that, okay, well, you're supposed to get this policy. It's really understanding even your own profile as a business, like what risk are you willing to accept and why? And can you properly accept that? And what advice would you give to our audience? Because many people just go through an insurance renewal. It's like, I just got to do this, right? Like it's just it's an automatic annual thing. But I think what I'm talking about here is like actually making a plan to understand your risk and how are you properly managing those risks, even well outside of insurance. Like, what would you tell to our audience about how to start? Like, what would you tell them what to think about? Where should they go with this?
Yeah. I mean, it really starts with the insurance advisor fully understanding the business that we're looking to protect, right? It's one of the things that in the insurance industry as advisors, we really dread when someone says, "Hey, I'm going to send you a copy of my policies. I'd like you to quote it and just see if you can give me better pricing," right? Well, the problem with that is that we may not feel, based off of your business operations, that your current coverages are adequate. Maybe you have something you don't need. Maybe you don't have something you do need, right? Maybe you have too much limit within a particular category that you could cut back your spending, right? Maybe you have not enough limit in an area that's a much larger risk than someone has communicated to that client before. So where it should start, in my humble opinion, Mason, right, is the insurance advisor having a thorough conversation with the client about what their business does, why they do it, how they do it, who their customers are, what kind of contracts are in place with their customers. Because if we don't understand that, we can't truly provide guidance on what their coverage should consist of or which carriers may be better suited for that business based off of what they do day in and day out.
I mean, it's kind of like I think of it in the same sense. Like on our previous episode, we actually talked about trade credit, risk and insurance. And it's like, yeah, just because your neighbor has it, again, doesn't mean that you necessarily need to have it. Like I honestly, in personal opinion, is if the majority of your business and you have little concentration amongst each customer, and then the majority of your business is to retailers, Fortune 500 companies, probably don't have a lot of trade credit risk, right? Like at least it's a lot less than your neighbor. And if you have a balance sheet full of cash, et cetera, like, nah, you probably don't need to buy it, right? But you have to understand all these things. Like you said, like you actually have to understand the business, who are the customers, et cetera. So it's all starts with really reviewing what do you have in the first place. Um, what has been your insight in regards to, you know, because to really have a solid plan, obviously you're an advisor coming in from the outside seeking to understand the business, but um, there's even things inside the business that can be done, right? Like I'm thinking even from an accounting finance perspective, like, yeah, you could sell a cybersecurity policy. At the same time, somebody inside the business could go about implementing, different technologies that could prevent things too. So like, yeah, you could insure it, but you can also implement your own internal controls. Um, I have found though personally, unless somebody really owns this function, like unless that there is some leader in the organization that, hey, they're the ones leading the risk management function. Um, it could be tough. Like it doesn't work well that you end up just insuring things and not really taking into account what can be done internally. Um, what have you seen as best in regards to the roles that should own this function?
Yeah, I think that really depends on the business itself, right? How large their team is. Is it a team that everybody wears multiple hats, or is it a team that is large enough that they can justify having a dedicated risk management professional that's a full-time risk management professional on staff, right? We see a lot of different things. Oftentimes, it's multiple people involved in that process as opposed to just one, which I think is very healthy. And I think it provides a really good perspective for a mid sized business who maybe cannot justify having a full time risk manager. So typically, what we'll see CFO, director of HR, and an owner involved, right? It's where you've got multiple perspectives. Everybody has their specialty. Everybody has their opinion based off of what they deal with day in and day out. And that really gives, I think, a better comprehensive look at all of the different angles of the risks associated with their business. Now, if someone is large enough and they have, which there is a lot of them out there, of course, right? You've got a director of EH&S, you have a full-time risk manager in place. Oftentimes, there's nobody else involved in those conversations. And sometimes I think it's perfectly fine, right? But other times, I do think there's value to seeing a financial professional and the risk advisor, or the HR professional and the risk advisor for that company. Because again, having those different perspectives, I think really helps to make sure there's not a topic that gets overlooked.
No, I appreciate that take because even I think in, throughout my career, um, I wasn't an HR expert, right? That, in regards to employee risk and employee liability risk. Sorry, y'all, I'm trying to turn on one of my lights here. So our audience knows that you know, we do this live or we don't really do a whole lot of editing. I just thought that it'd be nice to have my light on up here. Um, but yeah, I mean, there's no way that I think oftentimes the CFO is one of the dominant ones that comes in and takes this position. But I think even to your point, having an owner involved that um, owners oftentimes in agribusinesses, especially if they're the founder of the business and they've helped scale it, like there's a sales side to things too in regards to really understand the customer profile that even the CFO may completely miss, right? That there's elements of the business supply chain that an owner may understand better versus the person that's handling the finances, and then an HR is going to bring their own perspective to it. And I think I like that although that there may be a profile of a person spearheading it, at the end of the day getting those collective thoughts in the room. And I mean, I like to see even amongst the clients that we work with, sometimes they're smaller, but at least having like a fractional HR person or like just some HR support there, it's just so critical that the moment that we come in and even like we're probably their first finance arm to the business, like if we're not seeing something on HR side for an agribusiness, it's a big red flag for us that we need them at the table because they're going to understand and perceive things that are incredibly important. I mean, people are your assets, right? So um, I'm interested, Matt. You know, like I said, a lot of people, they look at insurance and they say and they look at risk, and it's not a very fun or sexy topic, right? I mean, I know you think it is, but not everybody does, right? But you know, especially with insurance, I think people can get into the game too of, oh, I'm just looking for the cheapest policy, and they're probably hearing a lot of sales pitch in regards to, well, we appreciate and value the relationship, et cetera, et cetera. And kind of peeling it back real quick, what do you see are some kind of unknown opportunities or benefits of better risk management outside of just, hey, we can save you money on not paying a claim? Like, what are the benefits to a business to have a more comprehensive risk management plan?
Yeah, I think the biggest advantage is when there is an incident that occurs, you don't have people that have that "oh crap" moment, right? People, I think, have a sense of comfort and a sense of um, peace when there's an incident occurs, knowing that they have thoroughly vetted all the different operations, all the different exposures. We talked about this kind of scenario with our advisor on the insurance piece. This is what we believe we have in place, and this is the intent of how this incident is going to be covered, right? I mean, that in itself for a business owner or a CFO or a risk manager who is, the front line when that claim occurs, not having to think, "Oh crap, am I covered?" or "Oh crap, do I have enough coverage?" That's huge, right? And we as insurance advisors want to have that same mindset. When I get a call from somebody or our claims team gets a call from somebody and they report back to me and say, "Hey, Matt, your client just reported they had this incident," right? We just this morning had an incident where a gentleman in a tractor driving an implement actually hit a telephone pole on a power line, right? Wiped out the power line. My first thought was not, "Oh boy, I hope we have coverage for this. We didn't talk about this kind of thing," right? My first thought was, "Thank goodness we know this client's operation. Thank goodness we have the proper coverage in place. We have the team in place." So there's a lot of comfort there, right? So it's to your point, right? It's not only a matter of saving premiums, but it's equally as important in the matter of when there is a claim, not only do you have proper coverage, but you also have adequate limits in place, and not only to protect them as their own business, but also to protect third party companies or third party individuals that are involved as a result of that incident, right? So, look, I get it. And you hit the nail on the head, right? Nobody enjoys talking about insurance, including myself, believe it or not. I tell people that often, like, hey, if we're spending the entire meeting talking about insurance, it's not going to be a good meeting and it's not going to be a fun meeting, right? Like, let's get into the weeds about the business, right? Let's talk about scenarios, and then we'll come back to you with the details and the nitty gritty of the insurance placement and the guidance, things of that nature. But yeah, if someone is leading with price, focused on price, that's a red flag for us as insurance professionals because to us, that tells us they're not really interested in taking the time of truly evaluating their coverage and their insurance placement and their claims process. They are more focused on insurance is too expensive. How can I get a better rate? And whoever can get me that better rate, let's just make the switch. Right. I think all too often, unfortunately, and look, we get it, especially in ag, especially in California, but input costs in every single category are on the rise year after year after year. The last thing we want to be doing is adding, right, to that input cost going up year after year after year. Sadly, in California, it's very hard to avoid that right now, right? There's only a couple coverages out there that are not on the rise right now when it comes to their rates. So when we have the opportunity to have a thorough conversation with the client about the business, about the coverage, and about the whys that the placement is being recommended, everybody is going to benefit from that.
I think you brought up, that kind of ancillary benefit of when you have a proper risk management plan. Management is not just a prevention aspect to it. It's what do you like surprises will happen. Like maybe surprise is the wrong word. Um something you will not operate a business over a 10-year period and not have an event happen that is an insurable event in California. I feel like don't quote me on the exact 10-year, but I feel like it's pretty fair to say that over a 10-year period, you are going to have some type of claim or event happen. And it's like you said with ag that already there's enough putting out fires of by nature of just dealing with Mother Nature that, hey, the rain came in a lot harder today. I mean, we were talking just last night about, the fact in Fresno that and Clovis area that, the fog, et cetera, that, where you're going to be able to make the recording time and, the disruptions that are caused by weather so much and, employee issues, et cetera. Lots of things make it very difficult to have a normal day in ag as it is. You very rarely are going to have a day where your office day looks exactly as you planned. Um, so when those events occur, it's really nice to know that, okay, we have a process and we have a system and plan for how to deal with these. And some of that can be obviously working with your team, and working with your risk advisor that already has, their own systems and policies. But a part of it too is it's like, hey, like if you have a cybersecurity incident or, somebody gets in an accident, having some of this stuff documented in regards to who to call, like, okay, where are they located? What hospital should they be going to, et cetera? Having some of this stuff in place, make sure that, one, you are going to have to react to a fire, but you're going to react to it appropriately because you have a plan and you know what to do. Um, and it's not just the financial impact of that event. I mean, if you don't handle particular things correctly, and I just look back and think of the state of California, like if you don't handle a particular employee claim correctly, it's not just that the financial claim of that event is concerning. It's your handling and management of that event can cause bigger issues too, right? And so, it's just so important that it's not just about okay, I'm insuring an event. I'm trying to get low cost policy and trying to reduce a claim. Like you mentioned the idea of the disruption is going to happen, but the aspect of the disruption being less disrupted because there's a plan and I think even there's an additional thought that comes to mind outside just the financial claim, but I think you and I have seen it to where, especially like on the product recall side, once a brand is tarnished, it's tarnished. It's really hard to recover that. It's not just that, hey, if there's a product recall event that company's going to have to, go and, pay to recall all the product to dispose of it, et cetera. There will be buyers that will be scared of working with that brand and your sales will be, reduced as a result of it. And so it's not just the pure direct cost of that event. There's residual things that happen too as a result of it, right?
There's a ripple effect with every incident, right? And you've already alluded to it, but it's how you manage that incident that ultimately controls how large that ripple effect is going to be, how much of a negative impact it has on employee morale, on the business brand reputation, on how long the facility is shut down for because of an equipment breakdown incident, right? No matter the type of incident, there is going to be a ripple effect. And the product recall side of thing is a very interesting topic because that is one in particular where businesses that are well prepared have very thorough, very comprehensive product recall plans in place, and they know exactly who they're going to call first. They know exactly who from their team they're bringing in to have those initial conversations. They have their steps in order. They follow that process, right? Same thing with an equipment breakdown type incident. You guys are out in Texas, right? There's a little thing called weather out there, and that could be really, really significant from time to time, right? So if someone doesn't have, for example, if they've got a cold storage operation, right? And there's an equipment breakdown failure of some kind, or there's a weather event that leads to a power outage, if they don't have a plan in place of where they can take their product because their cold storage is no longer going to be able to maintain proper temperature beyond whatever number of hours or days they've allotted, they're going to be in big, big situation that potentially leads to loss of product, which leads to loss of sales, which leads to loss of customers. So there's your ripple effect, right? With product recall, you talked about the brand reputation side of things. In today's world, right? What's our news cycle these days, Mason? 2 minutes? I mean, it's crazy, right? So, the problem with incidents, especially with businesses that are in the food supply chain, that are dealing with retailers, with all these retailers being as large as they are, with the PR guidance, with the legal counsel, right? Your brand gets into an FDA statement, everybody is going to know about it. And one of the biggest things that we see our clients struggle with is it doesn't matter what the truth is. when there's an incident that occurs that has your name associated to a recall, right? In the very beginning stages of a recall, oftentimes the FDA is placing that recall because their job is to protect the consumer. Their job is not to protect the food supply company. Their job is to protect the consumer. And when the FDA has enough reasons, enough facts, maybe they're facts, maybe they're just common denominators, right? As soon as a company's brand is in the spotlight in that fashion, no matter if it comes out that you truly did have a positive test for Listeria, Salmonella, E. coli, or if they never find a positive test, there is damage done to your brand. And it's a matter of how that business manages that incident that will ultimately control how large that ripple effect is. Retailers are going to have their part in the process. The supply company is going to have their part in the process. The consumer at the end of the day, depending on how educated they are, depending on how much research they do for themselves, or if they just believe what they see on social media, you could have somebody that says, I'm never buying that product again because their name was in a recall. That recall incident may not have even truly been because of their product. It may have been because of someone else's product or something that happened downstream in the supply chain. So the businesses that take the time to truly put together, not only to your point you made earlier, the preventative measures, right? But equally as important, the root cause analysis and the crisis management plan for said event, equipment breakdown, product recall incident. The businesses that don't panic and look at each other across the conference table and say, well, who do we call first or what do we do first? Those are the businesses that are going to suffer with a larger ripple effect, right? The businesses that have that plan in place, that sit at the conference table, open up their binder and say, okay, this is who we're calling first. Call so and so and call so and so in. Let's go. Hit the go button, start with step A. Those are the businesses that are not going to be as concerned. They're not going to be as anxious. They're going to know what's in place. They're going to be confident in their plan of how to manage said incident. And as an end result, they're going to be far better off than the company who didn't want to take the time to have the hard conversations, to put the plans in place, to assign the team members to handle each step of a process that, is a result of a claim, regardless of which type.
I think, and even as you're talking, right? Like we keep talking about having plans. And I'm even as a business owner now, it's like in hearing, okay, we have to have plans. And it's like, man, the creation of these plans distracts from other major objectives of like, we got to get sales on on the board. Like we have to, produce, hit these targets this year. All of these plans and all this creation of these plans is a distraction to us being able to focus on that. And I get it, right? Yeah, it's a feeling, it's true, but the reality of I just remember, and I'm just bringing up a real live example when I worked for a company that, Wawona, many people are familiar with the brand, but had, a food safety incident. It was their second incident, and we got a call from their team about the need to do some traceability, into our supply chain because we had supplied them with some product. And it ended up being that we weren't affiliated. Nothing was traced back to of concern, but we immediately, I was grateful because we at least had the idea of like, okay, this is our core team that we get together when we have instances like this. We called, we had a policy where we actually had, the ability to call into a crisis team, a crisis management service, and we called them and talked to their legal team. And our first question, kind of like what I'm asking is, we said, what's at risk to us of releasing this information that, could there be a financial concern for us to release this information? And basically, the lawyer said, at the end of the day, the FDA, like you said, their intention is to protect the health of the public, of the people. And if you do not release this information, you could actually be held liable in a federal court of law for not, providing this information, allowing them to do their work to protect the people. And so actually it's more risk for you of trying to cover basically your own butt here. And I guess what I'm getting at in this story is that um, it was the fact that we just at least knew who we were going to bring to the table. And we knew the crisis management team that we could call. Like, and I'm not talking about this grand plan, y'all, that to our audience, and I want to kind of distill in a little bit, for our audience, what we're talking about, a plan that I think so many people could look and say, it's like their food safety manuals. And, I get it that some of the food safety managers out there take great pride in putting together a 100-page, food safety manual. And that's not what we're talking about here. I'd say that if I could break it down into simplicity for our audience, that if you're wondering where to start in regards to planning and creating a plan, honestly, get each of your functional heads from each part of your organization, whether it's the finance, the HR, food safety, and you as an owner, bring them together, have a meeting with your risk advisor like Matt. Lock yourself in a room for a couple hours and really seek to understand, hey, look at all of our policies. All the policies themselves actually cover all the functional areas of your business in one way or the other, right? So it's a starting point. Like, you don't have to reinvent the wheel here. And basically, first, just create a document and say, if anything happens, this is our core team. And we're just simply going to put a one-page SOP together and say, this is all of our cell phone information and this is who we're going to call. And oh, yeah, by the way, there's this third-party crisis management team that we can call. And then here's Matt's information. And if Matt's not available, this is who we call. And just first of all, so that if there's ever an incident, this is who you get together and who's going to be your problem solving team, right? Um, and then I'd practically say that from that meeting, if you could, begin to assess where it seems like you may have some risk in your business that, even though you're insuring, like, could you shore up some of these risks that, hey, my gosh, like, we don't actually have a password management system in terms of cybersecurity. Like, everybody just uses their name and 123, like, for crying out loud. Like, that seems like it's a risk. And just spend an afternoon and identify all the potential risk, and then just sit and prioritize them real quick, right? That you're not going to be able to tackle all of them. Prioritize what are the top 5 there. And then set a meeting date from a quarter from now and put some action plans in place as to how do you want to address those risks, like who's going to take accountability. Come back a quarter from now and say, how did we move on these action items? And then in that quarterly meeting, begin to prioritize what else is on the list and has anything new come up. Okay, this is what we're going to do, quarter at a time. Like, just, and I guess what I'm trying to say here for our audience is that I know that sometimes it can feel overwhelming of like, where do I start? But to me, literally put together a 4-hour afternoon, a 4-hour meeting. Maybe the risk advisor doesn't need to be there the whole time, but get your functional heads, have the conversation around who is our team, and let's get our contact information recorded whenever there is a crisis. And let's make sure we know who we need to contact. Let's get that one document in place. Let's spend an hour and identify what are all the potential risks in our business. Just put it on the whiteboard. Then assign what are the top 5 highest priorities, do some action items, come to the next quarter. And I just like, I think it's simpler than, or people will get overwhelmed by this, but not doing this, as Matt and I are identifying, that's the real problem here. Is that by not doing any of this, all of the time you feel like you saved because you focused on sales and other things that were quote unquote more important. Um, Matt and I have both been in instances with clients where, literally, say like in California, a PAGA event, right? Like a PAGA claim. We have been in instances with the client before where, literally, if the plaintiff's claim amount that they were seeking, we were weeks away from discovering that if the arbitrator actually granted them the full amount that they were seeking, business would have been done. And we were literally just on pins and needles trying to determine, are like, what are we waiting on here? Because if the number is this, we could probably still survive. If the number's that, we are done. And it's going to happen. And so, just beginning to progress with some of these quarterly plans is key. I know that, I've kind of gone down this rabbit hole of how do you do the plan, Matt? Do you have any additional thoughts there?
Yeah, I made a couple notes here, Mason, because you touched on a couple things that I think are really important that I think to you and I maybe are pretty simple. And I won't say obvious, but simple, right? One of them is having that, I'll call it a crisis management summary page, a crisis management document. And more specifically, what I'm getting at, Mason, and you touched on this, was everybody has all their different policies based off of different exposures, right? But I can't tell you how many times my team will get a request for a certificate of insurance, right? Well, we don't expect the client to have, a 5-inch thick binder of every single policy in one binder that they have to thumb through and trying to find all the different, crisis hotline numbers, all different certificates of insurance, whether it's workers' comp or auto or GL or whatever the case may be. So what we advise people to do is have a one pager, right? You literally just have a one-page document that, based off the type of incident that occurs, you have your claim contact number, you have your insurance broker phone number, you have your crisis consultant phone number, and then you have your legal counsel phone number based off of that incident that occurs, right? A one-page document. And if it turns into two because you've got a lot of different things going on, okay, it's a two-page document. But we try to get people to steer away from just having all the different insurance binders, or these days you have all your files saved on your computer, right? And you got to go clicking through to try and find within said policy, where's the crisis management number, or where's the claim number, or what's the first step in filing that claim, right? So have a one pager, in a general liability incident, right? Let's say you've got your claim number for the carrier, you've got your broker contact phone number for whoever their internal claims management person is that you've been assigned to, you've got your broker's phone number. If it's something significant and you have your legal counsel that you know you're going to be working with, you have their phone number on that same page. It just provides everybody with a lot more peace of mind when something occurs when you were not expecting it, instead of everybody scrambling trying to figure out what to do first, where to go, where to find that, right? Because when something does go wrong, the last thing people want to be doing is scrambling, trying to figure out where to go, where to start, where's that binder, what's that number, what's that gal's name that we were supposed to contact, right? So, yeah, Mason, to your point, spend the time, if you're a seasonal operation, earmark a date on the calendar during your downtime, have this 2 hour, 4 hour long meeting, right? And you said something else too, which was you don't need to have your insurance advisor in the room. I completely agree. I actually think you should have your first meeting completely without your insurance advisor. And I think you should have a second meeting, and maybe it doesn't have to involve all of the same people, but have a second meeting with your insurance advisor, sharing what you all discussed, what your scenarios are, what your plan of actions are, and then let your insurance advisor say, hey, kudos, right? You knocked it out of the park. I think you've addressed every exposure. I think you have a well thought plan in place. Nothing to add. Or you forgot this particular area of exposure, right? You should probably add this, or you should probably change this to incorporate that, right? I'll give you a good example. It's funny, but also kind of sad at the same time, right? But years ago, we were working with a very large company on a product recall coverage solution. And when we brought out a crisis management consultant because they wanted a third party opinion on what their existing recall plan consisted of. So we brought this guy out and we paid this consultant to review their existing written recall plan and provide guidance on what they could do to improve on that written recall plan. Okay. So he comes back with all of his feedback and he says, I called the phone number for the gentleman here that you have as your primary point of contact, which was a third party company at the time, but he was a food safety professional. And he goes, I'm sorry to tell you this, but I learned that he's been dead for a couple of years now. And he wasn't joking, right?
Yeah.
So unfortunately, that business had not reviewed their written recall plan in more than 2 years. And the said professional that was their primary point of contact had passed away, right? So, God forbid, should something have happened before that was caught, they probably would have been, for a moment, very, very concerned about, oh my gosh, now who do we call, right? So I think that's the first part of it, in terms of one of the key points you made, but also in terms of the crisis management contact person, right? I want to dig deeper on that. Okay. because every policy has a crisis hotline. Every policy has a this is what you do to report a claim, right? But every type of policy should have a different crisis contact person. And what I mean by that is, and especially because we're talking about insuring businesses here, right? We're not talking about me or you getting an offender bender on the highway. But if it's a workers' comp incident, there should be a contact person. Maybe it's a third party person that you trust. Maybe it's legal counsel. Maybe it is your insurance broker, but not the carrier. But there should always be a professional that you trust within that particular subject matter expertise that you can have a conversation with beyond just reporting the claim and then sitting back and just waiting to hear back from that claim representative same day or the next day or whatever the case may be. The business side of things, to the point that we addressed earlier, it's so much more than just reporting the claim and then having follow-up conversations, right? It's circling the wagons, having the conversation of, okay, where does this go from here? Are we protected in terms of what our next steps are going to be? Have we thought through this scenario in our previous engagement meetings about this particular risk, right? So that not only have you reported the claim as you had to do, right, based off policy, but you now have engaged with your team internally, externally, so be it, so that your business is in the best position possible to not only proceed through the claim, but also how to best manage all the ancillary things that can happen as a result of that claim.
I think we've highlighted like where to start and like what our audience should be thinking about. Again, I just want to encourage anybody listening, um, starting from hardly anything and becoming a really well risk managed entity. It's not going to happen overnight, and don't pursue that overnight either. Literally, we get it that um yeah, I've worked for enterprises that do 150 million in sales, and that you have dedicated teams do all this. I've also seen clients with 15 to 20 million sales where literally, the owner is wearing every hat, and they are the ones. I mean, we've seen grower, packer, shipper clients that literally the owner is working with the field to make sure they got enough fruit to pack in the packing house, and keeping growers happy and having conversations with them about the returns, and still managing a couple key accounts with some retailers, et cetera. Like they're wearing a lot of hats, right? So um, it's not about overwhelming. It's really just I even mentioned, you know, like sorry, excuse me, Matt has brought up, making this SOP, making this one pager as to who your key contacts are, and making sure that's identified per policy, et cetera. Um, I highlighted that, identify what all your risks are and then prioritize the top five. That could be 2 to 3 for all I care, really, right? The intention here is just that you're starting somewhere and you're evolving as your business goes. And you're just coming back to it quarterly. So just set a quarterly objective, get on the calendar. Hey, we're going to have a 2 hour afternoon meeting, and this is what we're going to talk about. It's going to be focused on risk, and we're going to see where we've progressed, and if anything new has popped up that we need to prioritize, and just take it 2 to 3 items at a time. And that, hey, what can we do? I think Matt and I also have highlighted, not just your insurance broker slash risk advisors is a support tool. Um, there are crisis management entities, right, that will review your documents, that they will poke, that you don't have to do this on your own, that you can get a third party person that, they're not necessarily the cheapest, but again, all the time that you could be spending in regards to trying to discover what should be included in your documentation, what's relevant, they may come back and say, in 30 minutes really quickly, yeah, this is what you got to clean up here. And then you have the plan, and you don't even have to critically think, right? I mean, for our audience, cognitive dissonance is a real issue that if you have to spend time to think about what to do, problem. I think we all enjoy rather probably going to a workout or whatever when somebody's just telling us what the heck we got to do than trying to think of the workout that we have to do, right? And so if you remove that piece and allow somebody to tell you step by step, this is what you need to go fix based upon the documentation that you show me, that makes it really palpable at that point, that you're actually probably going to get some traction with that because you have a clear plan as to what you can go fix and you don't have to think about it. So kind of as we wrap up this episode, and for our audience, we're actually doing a 2-part series here with Matt that we really wanted to get into more of a comprehensive risk management mindset and plan for business owners for agribusinesses. But the next episode, we're going to be diving into some best practices regarding certain policy types that ag businesses should be thinking about. So, Matt, anything you'd like to add in here to finalize this for or this episode, at least for our audience?
Yeah, actually, so you brought up something that is something I think I should share a little bit more detail about, right? You're talking about bringing in a subject matter expert to review something to help take that off the shoulders of a business. But at the same time, and this is something I share with clients too, right? Nobody wants their baby to be called ugly, right? Nobody wants to hear that. But sometimes that is what it takes in order for a business to address something that they otherwise would not have seen or thought of. And a good example I think of this is a workers' comp exposure. Okay. We bring out third party professionals and we have our own team as well. Carriers have some of their own representatives, right? But they're going to do a walkthrough of a facility. Mason, if you're the operations person or the GM, you walk through that facility every single day. You could do it blindfolded and get to every single electrical box, you name it, right? You know your facility better than anybody else in that company does. But I promise you, we see this time and time again, bringing in a completely different set of eyes, especially one that has never seen your facility before. When you find the right person, they are going to notice something that your head of operations or your GM did not notice because it's just part of the atmosphere, right? It's been that way forever. There's never been an issue, right? We're good. Sometimes it takes a fresh set of eyes, a fresh perspective to see something, to be able to bring it to your attention so you can better address it proactively to avoid an issue in the future, whether that's an OSHA violation in a workers' comp situation, whether that's a food safety incident that could have led to a pathogen attaching itself to your facility, whatever the case may be. It's just a really good exercise to bring someone in from the outside, fresh set of eyes, fresh perspective, different perspective, right? To be able to see something that maybe otherwise would not have been addressed if it only stayed within your team and within your walls. So I think there's real benefit in doing that.
I think one final note, you brought it up earlier in regards to identifying the relevant contacts. Um, I just want to highlight this, right? That just especially for small businesses or lower mid market businesses out there, you may have a functional head of a particular area of your business. That doesn't necessarily mean that even though that they may be an operational functional head, that oftentimes an emergency contact too, you want to, be careful about who you're listing as a contact in case there could be instances where they may have to communicate to others. And what I mean by this is communication's everything, right? Like I gave the example that, hey, before, when I was working for a company and there was a food safety incident, we wanted to call our lawyers first to just make sure that, okay, whatever information we're releasing, and the lawyer told us, hey, dummies, like the FDA would come after you harder by not releasing anything. So go ahead and release it. Like I remember in point blank, like it was just, he was so bold. Like he said, why not? Why not release the data? Yeah. Why not release the traceability? But it was the fact that we took the time before going out and having this grand communication plan. And I'm not saying that needs to take hours. It's just, I think you want to be careful because also there's still a PR aspect in some of this, right? Like when you do have a crisis that, would you be confident that that person, if they had to speak with an outside third party, including FDA or anything, that they are going to represent your brand well and that they're going to say the right things? And because I think we all know we're talking to owners here, we have some people that are black or white that they do not understand context, right? That it's like, hey, if they were to go say the whole thing is on fire here, because it may be, the whole thing's on fire here, brand erosion all the way. So just kind of a final note, it's just important to consider who are you putting as that contact that just, think about that. Does this need to be the functional head that even though that this is the person that may actually do the traceability or something of that sort, are they the right person that should be communicating with the outside world is the thing, right? So kind of final note there for our audience, we're going to be diving in the next episode on particular policy best practices. So we'll catch you next time. Appreciate y'all.
Thanks,
Cool.
guys.